Hello there. Thank you so much for tuning in to Business and Beyond. On this conversation, we'll be looking at transactions, payments within the African continent, and we're delighted to be having the conversation with Mr. John Bosco Sebabi, who is the Deputy CEO of the Pan-African Payment and Settlement Systems. Thank you for making time to speak to us. And to even begin the conversation, when you're talking about payments within the African continent, maybe you can paint for us a picture. How is it looking?
Well, thank you, Fiona, for the invite, and I'm glad to be here to talk about payments, because payments constitute the backbone of the infrastructure and the road network. Payments are the linchpin of economic activity. It's probably the most important economic activity that one does, because every day either we are paying or we're being paid. How does it look like? Africa or globally, I'm going to talk about more cross-border payments, because national payments are in different countries and at different levels of development. I cannot speak about national payments in 54, 55 countries in Africa. So globally in Africa or in the world, we have 4 challenges of cross-border payments. Number 1, we have the cost, which is usually too high for people to afford. Number 2, you have speed. Sometimes the payments take 2-3 days, some even 10 days. Also, there are problems access. Who is accessing the payment system? Most of these cross-border payments. And lastly, transparency. You send the payment and you can't follow where it's going. You only get to know that, okay, it has arrived by the confirmation from whoever you sent. So how does it look in Africa? On those 4 challenges, Africa, we add a couple of them. Number 1, we have fragmented payment systems, regional payment systems. We have one in Comesa, another in East Africa, another in West, another in North. So when they are fragmented in nature, and regions are not speaking to each other through payments. The other challenge for Africa is also the currency of settlement. So we end up settling in the currency of third-party countries, which makes it more expensive again, adds to the cost. So that's globally in Africa, those are the challenges. I will talk about now PAPSS, the Pan-African Payment and Settlement System. And what are we trying to achieve? What we're trying to achieve is to support intra-African trade. In 2019, the heads of state signed, 2018, they signed the agreement for the African Continental Free Trade Area here in Kigali. Then in 2019, they set up the Secretariat to implement it. At that launch of the Secretariat, the heads of state decided that we must have a payment system to back the trade. There are a couple of challenges in intra-African trade. I mean, you have the road transport in terms of road connectivity, airport connectivity, but there's a soft infrastructure, which is payments, that's impeding intra-African trade. So this is globally how it is in Africa, and this is the rationale for creating PAPSS. And there was no better institution to give it to than the Trade Bank for Africa, which is Afrexim Bank. So Afrexim Bank was given this mandate by the heads of state, and also in its own establishment agreement, it has the mandate to support payments arrangements. So it's a mandate that was given to it a long time ago, but the heads of state re-emphasized it in 2019.
And when you're looking at everything you've just said, even Sub-Saharan Africa, according to statistics, is the most expensive region when it comes to transactions and sending money. And it's been about 4-5 years now since the implementation of PAPSS. How much impact would you say we've seen within that? How is the traction? How is the engagement? How are Africans even receiving it?
Yes, PAPSS is well received in Africa. Understandably that we've not signed up all the countries, but to date we have 42 central banks in Africa and 55 countries. So to date we have 28 countries signed on, the latest being the central bank of the Central African states, which is BEAC. BEAC brings in six countries, which gives us a total of 28 now where we are. 19 are already connected and operating, and the others also in the process to connect. So the process is usually the central bank comes on board, and then commercial banks also come on board. And commercial banks have the bulk because they originate the transactions. They originate and receive the transactions. So they've got to sign on as participants, but also connect in terms of technology. So that takes a while sometimes. But in terms of impact, we look at in terms of pricing and speed. Speed, perhaps, is an instant payment system. A payment goes through in our agreements we commit to 120 seconds, but averaged for the last 4 years that we've been operating, we've averaged around 15 seconds for the payment to go through, which is a great impact as compared to 3 days or 2 days or even a day, and sometimes can take a couple of days to arrive. But now with PAPSS, it's instant and happens in seconds. Number two, even if the transactions are still at the low end, growing rapidly, but we see that the speed is achieved and cost is achieved. So PAPSS today is the lowest cost payment system that you can use to send transactions across borders. Now, in terms of cost, we've realized that we save up to about 85% or 90% of the total transaction fee that usually one would spend on if you use the traditional correspondent banking system. And once you use PAPSS, you save about 90%. So this is why that's the impact we see now that it's going to. So as the scaling up of the transaction happens, then the saving and the impact can be realized as well.
Looking at speed, you've mentioned around instant transactions around 120 seconds, or even looking at the amount of money someone is saving, 85 to 90%. So when you're looking at that, the numbers that you're even giving us, how much would you say it's having an impact when you're looking at the larger economic integration within the African continent? How is it fitting into the agenda that the continent has?
Yeah, the agenda for the continent to integrate Africa, and especially to do the financial integration of Africa, stems around payments. So this drives into what we are trying to achieve as Africans. See, one, sovereignty of payments. It becomes very important. We have seen what has happened in the world today, that geopolitics plays into this. And once geopolitics comes in, then the most affected sector of the financial sector is payments. Either countries are cut off or they can't access certain systems because of geopolitics. So Africa needs to have sovereignty of payments, and PAPSS comes to play this role. And this is the main purpose of PAPSS, to be set up to say, well, can we have sovereignty of our payments? Can we control our own payment rails? Can we also determine and settle in our own currencies, which will be the ultimate goal for PAPSS, to make sure that African trade is conducted in African currencies and settlements are happening in African currencies. So that's what PAPSS is all about.
So how is it like? Maybe give us a scenario. If I am a small business holder here in Kigali and I do a transaction to a colleague in Ghana or vice versa, walk us into it. How does it really look like, and even the currency exchange itself?
Okay, this is what happens. You are debited your Rwandan francs, not a problem. Nobody's going to ask for any foreign currency. And the recipient receives in Ghanaian cedis. At the background, the banks will handle the exchange rates using a third-party currency, because that's what we operate in today. What we're working to achieve is an exchange rate mechanism. That's what Afrexim Bank is working on. Once we have an exchange rate mechanism, then these currencies can convert into each other. But more importantly, once intra-African trade steps up and maybe comes about 50–55%, currencies align. We have research has proven that once trade increases to more than 50%, then currencies do align. I'll give you an example of, say, if you go to very busy border posts, for instance, Rwanda and Goma. Usually people exchange currencies without a reference to the dollar, because trade there is very active. Commerce is what they're doing every day and at very high volumes. The value is meant to be very high, but the volumes are very high, so currencies tend to align. So we are working towards having an exchange rate mechanism to be able to achieve that. And also we are looking at technology, what can we do with stable coins, the central bank digital currencies, so around those areas. It's a very long journey that we must achieve, but we've started. We've started by having the systems in place, and now those mechanisms can always also follow as trade steps up.
I can imagine having negotiations in East Africa or West Africa, it's different. What would you say are some of the challenges that you've had to experience, especially when implementing PAPSS across the different markets?
first of all, what we encountered before, we had hoped that central banks will settle for their markets. So we run what we call the central bank settlement model, where central banks open up accounts at Afrexim Bank, put dollars and settle for their markets. For instance, BNR to settle for the Rwandan market, and Central Bank of Kenya to settle for the Kenyan market. But then we realized that actually economies in Africa are different levels of liberalization. That would work very well where the economy is not fully liberalized, where there's a bit of control on the capital account, especially on dollars, where central bank comes in to control that. So when we go to implement this in certain parts of Africa, East Africa especially, Southern Africa, central banks say, no, this area is not ours. Actually, commercial banks are doing it on their own. So then we came back with what they call the commercial bank settlement model, which we now implement. So commercial banks come in, they settle for themselves, and central bank doesn't intervene in that. And in West Africa, it was working differently. So we had to run these two concurrent, and that's a lesson we learned, that okay, we need to have a couple of settlement models so anyone can fit in. That was the major kind of slowdown in implementation. Now that that has been achieved, many commercial banks have come on board. Even central banks are more comfortable to say, look, I'm not going to spend my reserves to settle for the markets. Then commercial banks, please go ahead. I will only stay at the oversight level, at the regulatory level, so that payments are smooth. So that's one of the challenges we came across. Now we overcame it that way. And also in terms of regional payment systems. So many countries have regional payment systems. So the thinking that was probably perhaps going to come and cannibalize some of these systems, and then we explain and say, well, we don't come to do that, to cannibalize them or to displace any. We come to support them to be interoperable across Africa. So that's a message that we've been giving out, and that's why we have agreements with the Regional Payment and Settlement System of COMESA. EAC, we're also speaking to them in what we call the East African Payment System, EAPS, and also we're speaking to BUNA. BUNA is the payment system in Northern Africa, between the North African states and Arab countries in the Middle East. So we're speaking to all of them. And of course, we started with the West African Monetary Zone, where we are, and we're now speaking to ECOWAS in the form of BCEAO. BCEAO and BEAC are the largest, probably, monetary unions that we have in Africa, French West Africa and Central Africa. And these they have together 8 countries plus 6 countries in BEAC. It's about 14 of them. So these two central banks are managing about 14 countries. But we're also speaking to them. BEAC just signed this month. They're now on board, and we're going to start integrating their banks and the central bank as well. So these are kind of different dynamics that has been a long journey which we've taken, and discussions have happened, and we overcome every challenge in every market the way we handle it on a case-by-case basis.
It's been slightly over 4 years, but now when you're looking at the impact, the extent of impact that has been achieved so far, is it as it was earlier intended? Because we've seen cases when initially leaders across the continent are very enthusiastic when it comes to adopting and creating solutions for Africa. But when it comes to actually walking the talk, the negotiations behind the scenes, things kind of slow down, take a back seat. How has the forthcomingness, if we may say, of the policy of regulation even to make sure that this is fast-tracked?
When you talk about payments, you're talking about money, livelihood of people. So anyone who's going to allow you to touch that, they're going to be very careful that you can actually do it. So definitely central banks and banks have to make sure that we have the capacity to do it. They have to ensure that we have a robust system that are secure. So we have to show that we are ISO certified, so many certifications. We have to show that our system is robust, and all this. So the discussion at the political level is very good, and that's a go ahead. Now, when you come to the technical level, you have to ensure that so many things are put in place. You have to make sure that PAPSS is actually conforming to what we call the PFMIs, the Principles for Market financial market infrastructures. So we had to have an assessment. And so the banks who are members chose the Bank of Ghana to come and do it, which they did, and confirmed that, yeah, actually we're conforming to more than 90% of the principles. So all these things came into the discussions. So the 4 years have been more of building a reputation, building the infrastructure, building the principles, and being able to make sure that you're playing at a global level. No one is going to lose the payment. No participant is going to doubt the capacity. So that's the 4 years have been to that, and also building scale, make sure that we are spreading and also deepening our presence in these markets. So the next journey should be where we are. Let's now deepen. Let's go into this, touch every other bank. Let's make sure that we're interoperating every other systems. To date, our PAPSS Governing Council has allowed us to connect directly to the biggest fintechs, Airtel Money, MTN Money, and all that, because we've seen that the bulk of the payments are now through also the big fintechs. So initially we said, okay, let's have only the banks, and let's have the others go through banks. So now we're having that kind of openness. So it's been a learning curve.
The African Continental Free Trade Area boosts intra-African trade in itself, and PAPSS has come, is integrating into this to make it more seamless. How much of an impact do you think, how much of an impact would you say PAPSS is having in the achievement and realization of the AFCFTA vision? And can AFCFTA actually work without integrated payment systems within Africa?
Yeah, to measure the impact presently in terms of scaling up the SFTA may not be very easy because of the volume of transactions and also where at the stage at which the SFTA is. However, is to know that, look, payments are a pillar to the implementation of SFTA. And as we go along, it's one of the issues, one of the challenges of intra-African trade. It was the payment system. So once that is sorted out, then there are others that are surrounding that. Of course, you have poor road networks, airports are not connected. You have legacy systems where countries are more attached to their colonial masters and trading with them easily. So these kind of things come into play. So it will be difficult to measure the impact of PAPSS onto the implementation of the SFTA. Apart from what I talked about, the cost, to say what, if I'm doing one transaction, this is how much I save. So imagine if 1 billion transactions are going through. This is how we measure it in terms of the impact on cost and also in terms of using local currencies. Those are two advantages that PAPSS brings onto SFTA and intra-African trade in general.
There are also other products that are going to be launched under PAPSS. Looking at PAPSS Card, could you also just take us through some of the other elements that are also being introduced to make this an easier adoption for the continent?
Yes, and thanks for asking that. Let me touch on only two. First is the PAPSS Card. I'll talk about the PAPSS Card. So, to date, the card business is the most interoperable in the world. You can move with your MasterCard, your Visa card, everywhere in the world. Now, when we looked at it and we talked about discuss this with central banks and commercial banks, they said, fine, there's account-to-account payments that are a problem, which you're solving. However, we also have a problem in the card industry. Say, okay, fine. There's a problem. One, if I use my card here, which is issued in Rwanda by one of the banks, that transaction will go and will take a trip to the US, change into $2, comes back and change back into Rwandan francs, because I have my account here and Redstone Blue has its account here, but still the transaction goes out of the country. That's the one problem. Number two is the geopolitics. Anytime these cards are switched off. So we thought that we can also have a solution into this problem, and we came up to create the PAPSS Card, which we launched in Abuja last year, proved the concept. Now the company has been set up, the PAPSS Card. It's actually registered in Rwanda as well, and the banks should now start to issue cards, the PAPSS Card. It's backed on the technology that any card that's operating in Africa, if the card is issued in Africa, it should be settled and routed in Africa, and also paid in local currencies, the same principle that PAPSS carries. So we are now into the implementation stage. We're working with switches to make sure that the PAPSS card becomes the switch of switches in Africa. And then we're in discussions with Discover, so that if that card goes out of Africa, it can also operate. So at that point in time, Africa will be controlling both the account-to-account payments through PAPSS, main PAPSS, and also the retails, like cards, in its own sovereignty. That's one of the things we do. The other thing that we've worked on and has had impact is what we call the PAPSS African Currency Marketplace. How did we come up with this? 2-3 years ago, many currencies in Africa experienced turbulence, instability in their currencies. The cedi, the naira started depreciating. Kenyan shilling was doing the same, and this had an impact in companies that invest across borders, especially airlines and reinsurance companies. So, because once Kenya is in Rwanda, it's selling tickets in Rwandan francs. So that means any instability in the Rwandan franc affects assets that are here. So many of these institutions were experiencing a deterioration in assets. They are losing value. So what we happen to do is that we linked up, we have a marketplace that links up the players. So we could exchange the cedis into Kenyan shilling without actually moving any currencies across. So we identify on the platform, identify parties that are willing to sell and buy currencies, and actually we saw it working for a couple of companies like Kenyaways benefited a lot, Qatar benefited a lot, Zepri benefited a lot. So actually we piloted and used Zepri as in the pilot, which went very well, and this was so much value has been exchanged within the PAPSS currency marketplace.
For the currency marketplace, when it comes to the currencies within different markets, you did mention very volatile, the exchange rate. So for that, how do you manage to?
So what happened was, we had a company in Ghana, say Rwanda. Let me use Rwanda as an example. When Rwanda is in Ghana to receive the cedis, and if Rwanda needs Rwandan francs, that's what they operate in here. So, and if Zepri or say Ghana Airlines is in Rwanda and they receive Rwandan francs, they need cedis at home. So these two agree on a rate. We credit Rwanda here with Rwandan francs, debiting Ghana Airlines, and also down in Accra we do the same, the reverse for Rwanda. We debit it in cedis and credit Ghana Airlines. So this is how it works. I'm using those two as examples, and this worked very well. That many firms were able to externalize value without actually involving at all a third country currency.
And how is Rwanda, when you're looking at the larger PAPSS, how is Rwanda positioned within the network? Because we do know that for other countries you did sign agreements with technical providers, with also different people, different entities for the technical support. When it comes to Rwanda, what are the current partnerships?
The Central Bank, National Bank of Rwanda came on board in 2023. It was in November, and then they are playing the role of supervision, oversight of payments, which they do, even in the normal payment systems laws and their own governing law. Then banks start to sign on. We have Bank of Kigali and BPR, they are all on board, and now many of them are doing a technical integration. BK has finished it, Bank of, I think BPR has also finished, the others are still in the process. But still, we're also working with a switch, ARA switch. ARA switch is, we are working on them to see how they can be what we call the ultimate creditor. That means that even for any other client in Rwanda whose bank is not yet on board, they can receive the funds from Kenya, from each other country, and then distribute them through BPR to the other banks. So now, if Fiona, your bank is not yet on board, and somebody in Nairobi needs to send you money through PAPSS, they will receive it, through the bank, BPR, and now BPR will distribute it to the banks through the national payment system. So that's what we realized that can actually work faster to implement PAPSS in markets before we wait for all the banks to be on board. We have that with PesaLink in Kenya. We have now that with RSwitch. We're about to sign the agreement. We expect to sign actually today in the meeting, but some technicalities have to be finished first. We'll maybe do it in the next 1 or 2 weeks. We're also looking at ETHSwitch in Ethiopia to be able to do that for their market. So that can be a faster way of rolling out PAPSS in countries, even if the commercial banks are not fully signed up.
And now there are talks of digital currencies, different central banks within different markets also doing research on the CBDC. What role do you see digital currencies or even fintechs playing when it comes to the broader PAPSS vision?
This is going to be very important because I did mention earlier in the conference that settlement is the most important part of the payments. That's call them payments and settlement systems, because it's not enough for me to write you a check or to send you a payment message. What's more important is that actually my account is debited and yours is credited. That's the settlement. And now the banks also do their own settlement on in the background. That's the most important thing. You receive the funds and the banks do the settlement. Now the currency of settlement plays a big part. To date, of course, we have to jog around the dollar, the euro, and see how settlements are done through that. But CBDCs and stablecoins are going to come in to change this, especially if we have an Africa-wide coin, currency, or stablecoin, or CBDC, as they call it. It reduces cost to everyone, to the central bank itself, to the players. However, technology has to be adopted to the best usage to make sure that actually we don't compromise other macroeconomic fundamentals. For instance, the transmission of monetary policy. How it's going to be transmitted is very important if we're using stablecoins or CBDCs. But this is something that's going to help PAPSS, because PAPSS has the rails and we can settle in any currency. Be it an African currency, be it a coin, be it a CBDC, we can do that. So the mechanisms to do that must be done by the central banks and the banks.
And when you're looking 5 years down the line, where do you see PAPSS? What's the vision?
The vision and where I want to see PAPSS is that PAPSS should become a household name. Today we say, if I'm going to send you money or somebody sending you money, you say, well, send me the SWIFT proof. At that point in time, I would want to hear, send me the PAPSS proof. So that if a household name in Africa, that's where I want to be. And I think that's what we should be in the next 5 years.
And what milestones should we be looking up for us to know that we're actually at a good place? Are there specific key things that we should be looking at?
The first milestone should be that all countries should be signed up on PAPSS. That's the first thing. All African countries. Number two, we have over 700 commercial banks in Africa. If we can have 500 of them transacting through PAPSS, I think that would be a good place to be.
If there's one message you would like for African businesses to understand about PAPSS, what it will be? And is it only focusing on businesses or even individuals, someone who's watching? How can they be concerned? What should they know?
No, PAPSS is about payments. It has nothing to do with corporates or individuals. It's payments. Actually, to date, we have a lot of individual transactions going through PAPSS. Because of the cost of sending a transaction, most individuals are using PAPSS. So this is very important to know. The individuals watching can always go to their banks and always use their digital channels to be able, as long as their banks are signed on PAPSS and integrated with PAPSS, they can use this to pay. We don't question any payment, whether it's from an individual or a firm. PAPSS handles it.
And opportunities that this actually presents, especially for business owners, for cross-border traders, how much opportunities is PAPSS creating for them, opening for them? The possibilities, are they endless?
Well, the opportunities are many that PAPSS opens up. Number one, it ensures that value is exchanged instantly. That means whoever is receiving a payment receives it now. $1 today or money today is better than money tomorrow or in next 2 hours. So the faster the payment goes, the faster the velocity of money. And that means the economic activity is much faster. So it just has a lot of opportunities in terms of trading. Number two is that the cost is low. So that means you can send through your payments at a low cost, which ultimately benefits the beneficiary or your clients as SMEs or as traders. So these are the advantages that PAPSS has. And also the other is that you're using your own local currency. You're not going to run around sourcing for dollars that are expensive. You're not going to run around the bank saying, well, today the exchange rate is too high, I can't buy or I can't receive. So these are advantages that SMEs and other individuals who are using PAPSS do experience, and these are the opportunities that are there.
Thank you so much, John Bosco, for making time to speak to us.
Thank you for the invite, and thank you for the discussion.
Yes, this conversation wraps up today's episode of Business and Beyond. We're looking at transactions here within the African continent, and we've quite understood where we are, the challenges that are still present, the opportunities that the Pan-African payment and settlement system really offers. You're with me, Naingwa Fenamothoni.